Welcome to Elementary Australian Taxation Law. Today I will analyze fringe benefits tax. FBT is separate from income tax and was introduced in the Fringe Benefits Tax Assessment Act 1986. Fringe benefits are non-cash benefits related to an employee or associate provided by an employer in relation to employment at any time during the year of tax. FBT is paid by the employer but calculated based on the taxable value of benefits provided to employees or their associates. Fringe benefits are taxed at the top marginal rate and must be paid before 21st of May of the next year of tax. The FBT year is from 1st of April to 31st of March. An employee is a current, past, or future employee, a director of a company, or a trust beneficiary of a business. Note that sole traders, partners in a partnership, and clients are not subject to FBT as they are not employees. Fringe benefits with a total taxable value of $2,000 or more during FBT year must be reported. The minimum grossed-up value that can be reported is $3,773. Benefits are rights, privileges, service facilities, or rights or interests arising from a real or personal property. FBT applies to a wide range of non-cash benefits provided by employers to employees. These include private use of company cars, debt waivers, low-interest loans, expense reimbursements, and housing and relocation allowances. Meal and tax-exempt body entertainment, car parking, discounted goods or property are also considered fringe benefits. Residual benefits cover items not specifically listed, while miscellaneous exempt benefits are those explicitly exempted under the Fringe Benefits Tax Assessment Act. When evaluating FBT, we can apply the 5 principles of a good tax system: simplicity, certainty, equity, neutrality, and efficiency. FBT is often criticized for its complex rules, record-keeping requirements, and excessive exemptions and concessions. All of the above reduce simplicity, make compliance difficult for smaller employers, and increase the risk of not meeting legislative obligations. Legislation is complicated, making it challenging to determine whether certain benefits fall within the statutory definition or not. This lack of clarity creates uncertainty in determining the employer's liability. FBT promotes equity by preventing income sheltering and disproportionate benefits from salary packaging. However, some concessions are only available to certain sectors, and some benefits are more easily provided by large corporations. Thus, FBT lacks both vertical and horizontal equity. Although FBT narrows the gap between cash and non-cash benefits, high tax rates, compliance cost, and selective exemptions distort behavior. FBT rules also create tax advantages for partners and sole traders, meaning FBT lacks neutrality as tax advantages influence taxpayers' choices. FBT contributes less than 1% of total tax revenue, while imposing high compliance cost, particularly on small and medium businesses. These burdens divert resources from productive activities, making FBT economically and administratively inefficient. Overall, while FBT holds fairness in taxing non-cash benefits, its complex structure, inconsistent concessions, and high compliance cost undermine key principles of good taxation. To improve FBT system, I recommend simplifying calculations and ensuring accuracy, which will enhance simplicity and provide a clearer understanding of tax liability for employers. Certainty can be improved by narrowing the exemptions and concessions, as this will increase the predictability of taxpayers' obligations. Enhancing legislative clarity will reduce ambiguity and compliance complications, boosting both simplicity and certainty. Guidance and staff training will help improve efficiency by reducing resource leakage in compliance and tax planning. Finally, the reduction of compliance cost and audit risk through digitalizing the compliance process will improve administrative and economic efficiency and reduce the risk of non-compliance with legislative requirements. To conclude, even though fringe benefits tax ensures fairness for fringe benefits remuneration, it is not good tax in its current version. Thank you for your attention.